Hey, good morning everyone, and welcome to the PivotBoss pre-market video for Tuesday, November 5th, 2019. I am Frank Ochoa, aka PivotBoss. Real quick update here. I will be hosting a monthly market outlook for the month of November this afternoon after the market closes at 3:30 p.m. Central today. Please join me if you like, and it's open to anybody who would like to join as well. So it is a free event here, and we will be prospecting for candidates and looking for end-of-year candidates in addition to short-term swing ideas, and we will also be looking at the broader futures markets as well for directional cues. So please join me later on this afternoon at 3:30 p.m. Central Time for our November monthly market outlook. You can go to pivotboss.ecofin.co, and that is where we will be hosting the room in the PivotBoss community chat room. If you don't have a username and password, you can sign in or create one for free. So that's where we'll be later on this afternoon. We'd love to see you. All right, let's take a look here at the ES. You'll see here with the ES right now, this market remains very, very bullish. We knew that after this sell-off here, we had a good shot of seeing a bounce off the 200. We've gotten that bounce. We knew that bounce could take us perhaps back toward recent highs, and now it's taken us through recent highs and all-time highs now. We are seeing new all-time highs day over day right now. This market remains above the FOMC key level from October 30th and has seen a rally away from that level. Typically speaking, when that tends to happen, what you see is a return to that level followed by what could either be a buying opportunity and a continuation, or this thing could fail and then make it resistance and continue downward. So that's something to keep in mind, is that since the FOMC key level has gone bid here, it may continue to be bid on the next retest. The last time that happened was here. This is the FOMC key level from back in September, I believe. June rather. Right here. So it went bid. The retest was also bid, and it continued to highs. Right now it's gone bid. If it does pull back, it'll be right inside a bullish Pima trigger zone. It'll be right at prior resistance turn support, and it could be a buy. So just wanted to lay that out there just in case that scenario occurs soon. Alright, let's take a look at the NQ now. Here's a look at the NQ. Very similar price action. The one thing that the NQ and the ES both have right now is they both continue to trade within these uptrending channels here. So you can see this channel line right there. You can see this channel line right here. Nope, didn't draw. Right there. And it's right at the upper channel line. The last time we got above highs like that at the upper channel line, we dropped down back to the channel low. We're seeing that again. We're right up here. We're above those highs. That FOMC key level is going to be very important there, right? Because if we fail back below it, we likely drop back to the bottom edge of that range, which is at least 7,700. Right now we're trading 82.38 quarters, so that's way off those levels. But again, just a pattern to continue to watch. If the market gets heavy up here and can't hold above that key range high there, we could start to rotate back down quite a bit. Right now, this market remains bullish. As I mentioned before, taking the FOMC key level bid here would suggest that a retest could also be bid, and that could get you the next upside target here, which would be your 50% expansion and your 100% expansion ranges. So if you take a look, let's squeeze this up a bit right here. There you go. So we have a couple key ranges. This one would be a 100% target right here from this edge. It's that key range that comes like that. And then you have this key range right here where that would be the 50% expansion right there. This one's also a 100% expansion. So it's two 100s and a 50. That is a very hot spot for these impulse moves. It looks like that could be the next target there. Next target zone, and that's about the 8460s. Call it 8465. So just wanted to lay that out there, that scenario as well, because this market remains quite bullish. It It continues to see a very bullish PIMA trigger zone. It's gotten an unwinding from this big pattern here, which could suggest more upside strength ahead. All right, let's take a look now at crude oil. You'll see here with crude oil, it's currently testing the previous month's high. Previous month's high right here at about 56.90. It's right at it. It's been rejected at that level many times. Here's the end of September, rejected at that level. Here's a retest in October, rejected. Here's a test above it yesterday, and it pulls back. And now it's retesting from below at the moment. That's going to be very important here because, again, if there's a failure to find acceptance above that zone, then you likely rotate back down again, at the very least back to 55, 54, 55, and the FOMC key level. If, on the other hand, price can find acceptance above that level, then, you know, the last zone up here really that had interest was about 60, 61. But remember, this market has been downtrending. It has not really found much to like lately. It's been mostly sideways to down. Hasn't found a whole lot of strength. So finding acceptance above 57s would be important. But right now, again, watching for signs of rejection. If it can't hold 57s and it starts to fall back below yesterday's mid, that could be indicative of a return back to 54.69 and perhaps 54.07. Lastly, taking a look at gold futures. Gold's having a big day down today. It's had very quiet price action the last few days, especially the last 2 days. Today, downside break, it's already at 110% of ADR, 16 points, 14.2 points is the 10-day average. Again, we talked about this one being stuck inside the range right now between 1520 and 1480. You really need to get above 1525, or you really need to break below 1565. But the main range right now is this inner 1480 to 1520 zone. We've failed at the top here. We've broken 2-day lows. We're running stops. It wouldn't be a surprise to see this thing come test somewhere between 1480 and 1485 over the next 1 to 3 days. And then at that point, again, we could turn right back around, or we can start to attack the CLVN. Breaking below 1465 would suggest a major pullback that could take us back toward 1400. Right now, I think if there were a test at 1465, it could be a significant rejection and reversal opportunity. So right now, the short-term idea is that this thing is trending down on a day time frame, with more downside likely to occur into 1480 to 1485 within the next 1 to 3 days. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Remember, I'd love for you to join me later on this afternoon at 3:30 p.m. Central for my November monthly market outlook. All right, have a fantastic rest of your morning, and I'll see you in the trading room. Take care.